What crypto actually is it's a network. It's a network of people, it's a network of dollars, a network of use cases, a network of new things.
It is an asset, and this protocol gives the ability to tokenize that asset.
What's your take on the stablecoin war then, like Tether versus USDC?
Welcome back to The Roll-Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
RedStone modular oracles are available on 50 plus chains, trusted by over 100 clients, and over $6 billion in total value secured. Visit redstone.finance to find out more.
Chris, Eat Denver, first podcast on the Roll-Up. Maybe you want to do a quick intro about yourself, what you guys are building at Plume.
Yeah, totally. Thanks for having me. I'm Chris. I'm the co-founder and CEO of Plume, and we build a chain, a network, an ecosystem focused on bringing the real world on chain, right? And that includes RWAs and a bunch of things. But really, we want to make it easy for people to interact with the real world in a crypto-native way and deal with these things on chain, and then be able to swap and deal with both of these things at the same time, right? Following the lead of the stablecoin and how we do things today, and we think that's a way to sort of balance out what happens in crypto today and eventually onboard a bunch of people and a bunch of capital into the system. So anyway, that's kind of what we're doing.
Our last podcast, was at the other end of the barbell. You've essentially got this barbell of one pure financial speculation and on-chain gambling, and you got Pump Fund and Solana, and that's got product market fit, right? So I'm not trying to hate on that, but on the other side of the barbell, you've got the boring stuff, but with product market fit, you've got stable coins, you got RWAs, and there's just as much adoption on that side of the barbell as there is on this side. And so most recently, people have gotten disillusioned. Melee, Trump coin, down on, it's just the cabals are just too extractive and too predatory for any kind of sustainable wealth building and longevity. On this side, though, that still seems possible, right? So on the stablecoin and the RWA side, we've got $140 billion BlackRock T-bill fund that's getting tokenized with Securitize, right? And so that seems to, and I've just been kind of preaching this, right? As this is kind of, for everyone who's disillusioned with meme coins and jaded from that, let's go on this side of the barbell. We've got product market fit here. Do you think this is the right way to think about things with bringing this world on chain? Or what is your mental model when it comes to the product market fit that we have in some of these less speculative, boring, but very, very real products? And
Yeah, totally. Look, I think the honest answer is RWAs have caught a bit of a bid in the last couple of weeks, right? And it's because of the meme coin stuff, right? People are getting rugged by Trump, Melania, Milei, and they're sort of rotating back into safer, stable things, quote unquote, right? This has always been a thing, right? It just used to just be stable coins, right? The original RWA, the only RWA that's been a thing. And now it's progressing to things like T-bills or whatever else might be, right? Now, I think this, the increased attention on RWAs has been interesting to watch because you realize very quickly that most people have no fucking idea what they're talking about when it comes to RWAs, and 99% of the stuff is wrong, right? Most people really think of it as simple as this, which is Larry Fink has got $12 trillion at BlackRock, right? Crypto is $3 trillion today, and so if Larry Fink comes into crypto, he's going to buy my bags, we're all going to get rich and sing happily ever after, right? That's just not what's happening, right? Larry Fink is actually coming in today to dump his bags on us, right? He's bringing in the BlackRock money market fund, he's extracting cash out of crypto to look to grow AUM for his fund, right? But doesn't help grow crypto at all, right? And so the original premise behind what this is has not happened yet, right? Now, the reason
walk
is
through the mechanics of how Larry Fink comes in and dumps on us. What is?
Yeah, totally.
How does that happen?
Totally. Look, so in my opinion, there's kind of two sides of it. One is I think most RWA stuff today is TradFi people doing TradFi stuff on chain. Right? And they think of crypto more as a database, right? They sort of if you go back to sort of financial institutions, you had on-prem stuff, then you had the cloud, and now they're we'll do stuff in crypto, right? And when you use any of these products, go to Franklin Templeton's Benji's as an example, right? You go to the web app, and the web app is the primary thing, not the wallet, right? And then you choose where to settle, right? So if I buy some T-bill on there, I have to go through this whole KYB, KYC thing, I got to QP up, blah, 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 and then I choose, do I set Polygon or ARB or ETH or whatever it might be, right? And that's just retarded, right? Because at the end of the day, the problem with that is it's like going to Facebook, right, and choosing which database to save your message to, right? Am I going to use MySQL or NoSQL or whatever it might be? Nobody gives a shit, right? The technology doesn't matter, and every time you try to upgrade a system from a sort of back-end technology standpoint, it's always the same thing. It's slow, nobody cares, right? And it just never gets the attention, right? That's why most financial institutions are still on mainframes. They're not even the cloud. So the idea that they're immediately going to port everything to the blockchain is ridiculous. It's just not a thing, right? And so if you think about it that way, which is 99% of the stuff, right? Now, there's been a shift, though, recently, right? And that's been the history behind RWAs, which is why everything is permission chains, it's boring shit. That's why we've never touched any of this stuff, right? Now, the newer stuff, though, is actually good, right? In the sense that they've basically hired a bunch of crypto people, right? They've hired a bunch of people from Consensus and Galaxy and all these places to come in and kind of figure out what to do here. And really, they've shifted their mentality to more how we see crypto, which is crypto is not a technology, it's not a database, right? It's actually a very shitty database, right? What crypto actually is it's a network. It's a network of people, it's a network of dollars, a network of use cases, a network of new things, right? And if you tap into that, you can shift your mentality from, I can use this new database to save money on fund admin, to instead, how do I make money? Right? And how do I build new products and new services for a new audience, right? And things that are more in that vein, right? And so that's where they're going now. And that's kind of what this is. They're bringing in these products, right? Because that's what they're looking to do. Larry Fink, he's trying to grow AUM. That's all it is, right? At the end of the day, right? It's very simple. There's only two things that anyone cares about in this world. It's saving money and making money, right? And so that's what they're trying to do. They're coming into crypto to grow AUM by bringing their products here to find a new set of customers that they historically haven't had access to. Now, the problem with that is, right, is they've hit the limit, right? Because when you come at this from a crypto native perspective, a TradFi perspective, right? You're still bringing TradFi products on chain, right? Have you guys used BUIDL? No. Exactly, right? I haven't either, right? Nobody uses BUIDL, right? It's like 6 customers. Go to RWA.xyz and look at how many people use BUIDL. Look at how many people use OSG. Look how many people use any of these products, right? It's the same people. It's Sandeep at Polygon. It's Moadapt. It's the 5 or 6 foundations that do all of this shit. That's all it is, and that's why they've tapped out. Right? Because that's what it is. They're bringing a TradFi product on chain, which means there's the same TradFi experience, the same TradFi use case, the same TradFi thing, which is great. There just aren't that many trad-like institutions on chain yet. So you're going to very quickly tap that market, right? And so our perspective has always been, change never starts from the trad side first and from the top-down side, right? Change always starts from the bottoms up, right? Where's individual use case, right? If you look at the stablecoin as an example, the stablecoin is a perfect example. The stablecoin started off solving crypto-native problems. Today, it's used for all kinds of shit, right? But it started off solving crypto-native problems. It was a DeFi thing, it was a way to hold value, it was a way to have tighter trading pairs, all this kind of stuff, right? It started there, and then over time, as it sort of gained adoption and usage, then you had other use cases emerge out of it, right? The emerging qualities were, 1, emerging markets could hold value in this, right? US dollars, right? Number 2, then institutions realized that now you have enough people holding it, you can do cross-border payments and all this kind of stuff. Things that are obvious to us, but just took time to get there, right? And so to me, that's kind of where we come in from. You have to start bottoms up in order to make sure that when the trad folks come to the table, we have ball control and we have an ability to sort of help dictate how to build these products that make it work for me, you, and everybody else, versus just rebuild the same bullshit we had in the trad world on chain.
So given that BlackRock is trying to grow AUM, is there not a configuration here that means they can grow AUM and us as users and individuals can also grow and build wealth through some of these mechanisms? For instance, make this a win-win.
Yes.
Right? They come in and debunk this thesis, because this is one place where my mind goes here, how this could work. They come in, they provide $140 billion on chain. Okay, now we have $140 billion in new potential collateral. We can borrow against that, and all of a sudden, now we have $100 billion that's borrowed against the 140. Now we have 240, right? And then we can inject that 100 into altcoins, into DeFi, use it in collateral. We have more liquidity, right? Better capital efficiency, more flows, and overall more liquidity in the system for everyone. They grow AUM. They're able to go and get yield on all of these products and all this AUM that's on chain. Then all of us benefit from the better liquidity and all of this new investment that's made into more on-chain products.
Yep.
Is that a
all
win-win?
true? All true. There's a slight hang-up in it, though. The
Okay.
unfortunate truth is when you start from the TradFi folks first and try and get them to come in, the product is going to, it sounds right, and it sounds great, right? But it's not going to work. Unfortunately, truth is, like, you're going to have to QP. Right? All these products are QP. What means qualified purchaser. You need a $5 million net, a liquid balance to even participate in this. It's a $100,000 minimum to even do this. It's a quarterly withdrawal, right? And there's no transfers, right? For most of these products, right? So immediately, 99% of the audience in crypto is gone, right? And so that's the issue. Sure, in theory, it makes sense. In practice, nobody uses these things because the experience is absolute ass because they don't understand the crypto. These things matter a lot, right? Crypto native features are instant liquidity, permissionless, right? And the ability to sort of take it with you and make it composable. They're missing all those things today, so it's not going to work. That's why our perspective, you got to start bottoms up to force them to the table to allow, and now it's happening, right?
So then what are some of these products that are going to reach product market fit in the future from the bottoms up that are appealing to crypto natives then?
Yeah. I mean, I think
what are some of these, like what are you guys,
I think
what's your perspective?
There's two ways to look at it. One is the existing crypto market, what's good for them, and two, what are good for net new people coming in that would want to purchase. Now let's start with the net new stuff because it's a bit more straightforward, right? There's if we follow the path of the stablecoin, right? The stablecoin to me is the only RWA that matters. Everything else is bullshit, right? The stablecoin matters, right? And if you look at the path of the stablecoin, where does the stablecoin work today? The stablecoin works in Latin America, right? Brazil is the second largest stablecoin user on the planet, right? You've got things like Latin America, and more generally, you have things like Africa, Eastern Europe, all these places, right? So if you look at any economy that's built around the stablecoin, right, they're all fairly early in their cycle of understanding kind of financial tools, right? You look at Africa as an example, the idea of a savings account is not a thing yet. Right? And so introducing them savings tool is not a thing. But in Latin America, it's further along, right? And so you can now introduce things that are sort of like, holding the U.S. Treasury, right, and getting a 5% APY, or, some sovereign debt or corporate bond or whatever, getting 6, 7, 8 or whatever. That's a great product for them, right? And so that's one direction you can now QP'd up, right? Like, again, that's the issue. You have to change it. So
is that not a regulatory issue to make all of these products gate kept by this regulatory qualified purchaser, like accredited investor type of like wall that they have to cross in order to get access to these products?
Yes, it is an issue.
But is it a regulatory issue or is it a technical one?
It's a regulatory issue, but there are ways around it, right? And that's how we have to get creative with it and make it work, right? Again, today you look at DAI, right? There's two ways to do it. You do it the proper way, which is called a transfer, right? So I own XYZ thing, you buy the token, now you have to update, like basically the cap table's got to get updated, right? That says that you now own this thing, right? That's number one. Number two, though, is you can do the sort of indirect version, right? Which is you're transferring economic ownership, right? You're just getting the value. So take DAI and SDAI, right? The best way to get DAI today in the best way to get the U.S. Treasury today, right, is through SDAI, right? Right. You buy DAI, you stake it, you get SDAI, and now you're getting a pass through of what's happening in the maker vault, right? You don't own the treasuries. If something goes wrong, you're still screwed, right? But you're now getting, at least from a smart contract, you can see what's happening and you can get the economic interest in that, right? And so that's the way to do these things. You do these wrapped versions, you do the pass through, you do economic interest, you don't do underlying transfers. You have to find the right institutions that are comfortable with that risk, though.
Okay,
right?
So you have a custodian that holds the regulated asset.
That's right.
You wrap that regulated asset, that regulated bundle of assets, and the custodian then issues this wrapped version of this asset and passes the yield along to the end holder.
That's right.
Okay.
That's right.
And like, we've heard of Biddle, right? They've made a lot of noise around it. We've done podcasts with them, and these products are available on chain, but they're not available or accessible to those end users, right?
Right.
What are some examples of protocols that like are out there right now doing this from the bottom up?
Yeah. There's so there are two different ways to think about this. One is more classic financial instruments, right? And then number two is going to be more esoteric assets. And so we could talk about financial instruments are pretty simple, right? Like it's selling to the U.S. It's always complicated. If you just gate off the U.S. and you do a wrap version, you take a publicly traded, a liquid asset and distribute that way, it's actually not that hard, right? There are some hoops to jump through, but you can make it work, right? So I think that's the first step. Find institutions that are comfortable with it, right? Most things are just slow. That's just the reality. These things just like take time, right? But like a lot of them are getting more comfortable with this idea, right? Which is you need to do some wrap version. You need to like gate off the transfer restrictions, the rights, the owner, like the voting rights, all this kind of stuff. You have to like gate that off and just pass the economic interest and make sure it's worth their while. That's what everyone's thinking, right? Franklin Templeton is a multi-trillion-dollar asset manager, right? Today, even BlackRock's 12 trillion, right? You look at today, Biddle has what, 600 mil on chain? Right?
I was told it was 140 billion.
Yeah, no, it's not true.
It's
Just
not.
go to RWA and you can look at it. Like they tokenize, and that's another distinction. Everyone in RWA is just like we've tokenized so much. I mean, look, Plume has tokenized $20 billion stuff. Doesn't mean shit, right?
So you're saying it's been it's tokenized, but it's not on chain?
Right? No one's bought it yet. So I could tokenize anything, I could it's just like it's classic meme coin shit, right? Like I'll buy, I'll issue 1 trillion tokens. I'll buy one for $100, and now it's
Now you have $100 trillion.
Yeah, exactly. It's nonsense,
FDV.
right? It's
Okay.
bullshit. It's at the end of the day, it's the buy side that matters. The supply side doesn't mean shit. So everyone tells you these big numbers. We do it too, to be honest. So I'm not free of blame, But it's nonsense, It's the buy side that matters, right? And if you look at the buy side for any of these things, we have not crossed any material numbers for these things, right? Even Sonic, right, in 1 week has more TVL than all these things. Right. So that's the distinction here is the buy side is not here because the problem with taking this more trad version is it doesn't fit the retail market. So you need a trad buyer. Right, you need the trad buy side to come in, and they're not coming in for this. They can buy the shit off chain today. Why would any institution come on chain to buy T-bill when it's more expensive, right? Because I'm paying a bunch of fees and is riskier, right? Like fuck that. I'll just buy it all. I can just buy it in my brokerage account right now, right?
Yeah,
and so that's why you have to go bottoms up. You have
so
to go retail.
Are there any RWA products on chain or teams or projects that aren't just kind of, he said, she said, like, is there any like real stuff happening?
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Totally. I think maybe to start with things that aren't good, right? I think real estate generally is a tricky category. Doesn't mean it's bad, right? I think a lot of these regulated assets are tougher, right? I think private credit is a trickier one, even though a lot of people talk about it. Doesn't mean it's bad. On the other side, the things I think are good, right? I think things, again, if you focus on liquid, right, very easily accessible. So that comes down to things like ETFs, things like CLOs, right? Things like treasury bills, as an example, and also more esoteric stuff, things like solar panels, right? Things like oil wells, things that sort of resemble crypto, right? Because at the end of the day, what are you trying to do with this stuff? You're trying to earn yield. That's what this is, right? So you want to earn yield in a very straightforward way. In Texas, right, they call oil wells mailbox money, right? So if you own an oil well, they just send you the cash, right? Because it's a great business, right? It just sits there, it does nothing. And same with the solar farm, right? It does one thing. It sits there and it turns sunlight into dollar bills, right?
And
like that's what you want.
Check in your mailbox every month.
That's what you want, right?
So
and so those things are outside of the purview of this stuff. So it's a little bit more straightforward, right? And you can do that.
So which crypto companies are building these interesting use cases?
Yeah, there's a bunch that are building and working with us at Plume, right? And so, Projective is one. They do a lot of the solar panel stuff. Mineral Vault, is the one that does a lot of mineral rights. You have things like Skytrade that does like air rights. You have Uranium 308 that's kind of interesting that does like nuclear, right, and uranium. You've got a lot of diamond stuff, right? So it's called TIA diamonds or whatever. You've got a lot of stuff with gold, right, and like liquid gold. I think that's a really interesting. I know a lot of folks that sort of like gamble on shitters, rotate into gold, right, because they're doomers and they kind of think the world's fucked, right?
It's a different kind of stack sats, right?
Yes, no, exactly, right. So you could stack sats or go into gold, right? And so if you can go down that route, right, and do rare earth metals or commodities, like that's another interesting area, right?
I'd like to get your take on a recent L1 launch, which was Story Protocol.
Yeah.
And I was talking to Jason, and he was basically describing IP as a real world asset. You're right, like it is an asset, and this protocol gives the ability to tokenize that asset and essentially turn this into mailbox money in the sense that just like we have some kind of revenue producing asset, right? Whether it's solar or it's minerals or it's uranium or it's a T-bill and it's earning interest every month, that interest gets deposited into your mailbox or gets deposited into your wallet. You can own it. You can own licensing rights, and you can own intellectual property, collateralize it, and those who want to leverage it and buy it from you can rent it from you essentially, and pay you interest on that asset. What is your take on some of these more esoteric forms of RWAs and essentially tokenizing these things and making them productive assets?
Yeah, I mean we have IP stuff on Plume too, both music, art, different IP rights for cartoon characters and stuff like that too, right? So we have a bunch of stuff too. I generally think, to be honest, it's a little bit. I think it's an adverse selection problem.
Adverse selection.
Adverse selection problem, meaning. I was in venture before, and I studied the IP market a lot, right? And so actually, I know the area pretty well. Doesn't mean I know it better than the story guys. I'm sure they know more than I do. But I remember my takeaway at that point was very simple, which was the labels hold everything, right? All the good shit is locked up. It's the exact same problems in RWAs today. All the good stuff, why would you put it on chain, right? Maybe you can get one or two things on there. Maybe you get a couple things for show, right? But you're not going to get the fundamental stuff, right? We've done this every single cycle. Last cycle, Drew and Alex of the Chainsmokers, right, tokenized an album, and it was the back catalog. All the stuff that didn't make it on. Turns out nobody gave a shit because actually the front catalog is all that matters, right? And so there's that, right? They've done the sort of emerging Spotify artist stuff, right? I forget. There's Royal. I forget a couple of them, right? The one that Blau did, right? Where you can have a bunch of these artists come together and you can fund the artist, right? It turns out, if the artist needs to come to you for funding, it's probably a shit artist, is also the reality, right? And so there's an adverse selection problem with all this stuff. And so generally, to be honest, I'm pretty bearish on IP stuff in general. I think you can get some. And look, they may be different. They have a huge amount of resources. They've got a bunch of famous people around them. I'm sure they have an ability to get stuff and kickstart that ecosystem. So I'm not knocking them at all. But I generally think it's one of those things. Sounds good, doesn't make sense. Now where I do think it might make sense, to their credit, I think is in the AI stuff, right? I think the bet is entirely on net new sources of IP, right? I think existing IP, there's almost no way. I think it's all for show. But net new IP through AI, I think it's totally feasible that could be a thing, because now every person can create stuff, right? Now you can remix stuff and really kind of traces. That I can see, and I think that's the bet, I truly think we're a little bit early in that cycle, but look, AI moves so quickly that it's not, I don't think it's beyond belief that very quickly, that actually becomes the thing.
Yeah, and that is quite a big part of the vision. I think is to leverage AI or have AI actually as the buy side and the demand for a lot of that IP, so that they can leverage it in their models. But do you think this same issue applies to RWAs in the sense that the good stuff doesn't make it on chain?
Yes.
Right, and to your point earlier, essentially.
There's a distinction though.
These large funds can get it off chain, right? So why are they going to bring it on chain and do the whole?
Yeah, but the good stuff is stablecoins, though. No,
that's right. Exactly.
Isn't that the good stuff?
Yes, exactly. There is good. I think the distinction is IP is largely still speculative. But there are plenty of assets that just are looking for more money. Right, like stablecoins, like the Treasury bill, they just need more cash, and they'll take as much as we can get, and you can spread that throughout the world. Right, the guy in Mexico is not betting on Blackpink's IP rights. The guy in Mexico wants to hold the American. They want the stablecoin. They want the U.S. dollar. They want U.S. dollar. That's what they want. Right, and so I think it's a bit of a different thing. But again, not to knock them.
What's your take on the stablecoin war then? Tether versus USDC. What's your kind of perspective on this from the RWA view?
I think Tether's very scary in the sense that it's hard to see them not winning and taking it all. I think there's a big chance.
All of it, 100%.
I think they've recently really woken up in a scary way for everybody in the stablecoin game, which is they're hiring people in the U.S. now. They're really getting ready to engage. They have more money than God, and they can just buy everything, and they're getting pretty engaged and pretty active, right? And the market share is still so dramatically different for them. They're 85+%. Everyone is nothing comparatively speaking. And so I think it's hard. And then especially when you look at crypto today, it's so predominantly Asia, and you guys have been in Asia. It's all Tether. USDC is not a thing, right? They prefer that over anything. And so I think it's hard to see a world in which they're not the number one. But I think it's an area that's super exciting because there's tons of new stuff coming in. I think Athena is a classic example. It's that's awesome because I think it sort of lets you understand money in a way that's not money anymore, and allows you to sort of think about, stability and cash in a way that's not just tied to pure dollars. And so that opens up a lot of stuff and how you can do it. And so that is no doubt, I'm bullish on that vector versus new forms of take Usual as an example. I think Usual is great too, right? And the idea that you pass it to the user, right, is a great thing. I think there's a lot of potential in that, right? Because it doesn't make sense for Tether to hold all the money, right? It's just so hard to break past that cycle. The stablecoin business at the end, it's a very profitable business, right? In the beginning, it's an incredibly unprofitable business. It's an incredibly cash-intensive and resource-intensive business that spits off no money because you're making tiny bips off of nothing. So you just need a huge amount of money to make it a thing. And so I think it's very hard for any new company to even remotely challenge them. If they can get there, those are the angles. Some net new way of thinking about money, a la Athena, or giving yield to people and letting them hold that. I think that's also an interesting way to do it. Both those I think could take it, but it would it's just going to take, you're going to have to be a savage to go against Daddy Tether,
I agree. I mean,
they're at scale, right? And so they can earn a few bips, right? Because that's the business model. Is they have all of these treasuries in their treasury, right, in their vaults. they're earning yield on that, and then they're just issuing that on chain. They're just collecting the spread.
Yep.
Okay.
Exactly. And now they're doing they're buying agriculture, they're buying land, they're buying businesses, they're doing all kinds of private, like they're a huge part of like the RWA world, right?
Would you consider them a bank?
I think that's where it goes, right? At the end of the day, it's a bank. You put your deposits there, right? Today they don't give you shit. The minute they decide to pass it back, no one, like all these things are done, because they could do it in a heartbeat, right? They start to pass the yield back to the user and the holder. All of a sudden, like it becomes a very challenging world because they can do the same thing as Maker. They can subsidize for a long time, right? And really use that for growth. So, but that's exactly what it is, right? A bank takes deposits. You trust them that they don't fuck around with it and they don't lose it. They do stuff with it and they give you money back. Tether does the exact same thing today, except they don't give you shit. They just keep it all, right? And the minute the market and this happened in the financial bank in like the real world too, right? In banking back in the day when it was just gold, right? They didn't give you shit. Over time through competition, they forced you to give to money back to the depositors because it was competition. So that's exactly what's happening here, right? And the same thing will happen. And when that dam breaks, they have all the money in the world to like subsidize and juice growth. And so that'll be a scary thing.
I mean, scary how? Like what? Like a scary thing in terms of like the size that they could potentially reach.
Meaning, if I'm a stablecoin startup, like and also like I need Tether, like sort of like unclear origins and some kind of wonkiness there.
Right. The Bitfinex.
For sure. So kind of as we come to a close here, Chris, what is on your mind for Plume? How does Plume not become just a one cycle project? Like, how do you guys make this something that lasts long term, and what's the most important thing that you're focused on?
RWAs are going to be everywhere, right? I'm not an RWA maxi for one, and I'm also not a Plume maxi in the sense that, like, obviously I care about Plume, but I'm also not like every RWA should only be on Plume. That's not a thing. It's already not a thing, right? Like, the way I think about it is Plume should be the market for RWAs is so astronomically large, right, relative to crypto. Again, it's $3 trillion a day. The tiniest sliver of off-chain stuff is multiple hundreds of trillions, right? And so you're talking about several hundreds orders of magnitude larger than crypto today. And so if we take a look at all that stuff today, right, a lot of this needs a lot of care to bootstrap and get into crypto, right? Like this shit is not like just dump it in here, people will buy it. We've already seen it's just not a thing, right? Even something as simple as the US dollar took this long to get here, right? Let alone T-bills, which hasn't really become a thing. All these things require, and I talk to these financials all the time, right, with a bunch of our investors, and like it takes a tremendous amount of time. So like building the rails and building the experience and just doing simple stuff, being a human, calling to get on the phone, working on stake and golf and like all that kind of shit and getting them in, that's a whole thing to bring on. And the idea is we bring them in, right, through Plume by having this full stack approach. We combine software, liquidity, users, community, ecosystem, all this into one thing. So when you go to another chain, you don't have to do 10 things to like get this asset on chain, right? You can just come to Plume, do it all, build your kind of customer base, build the sort of ecosystem, right? And then you should go to wherever you got to go, right? I'm totally fine. Like if you have English, that's why we did Skylink recently with Layer 0, right? We're not streaming yields to all these other chains, right? We're more of pro like multi-chain. I think it should be anywhere, and money's going to move to where it wants to move, and people are going to go where they want to go. Force them to stay on Plume is just not a thing, right? So I think we use what we are good at, which is building community, building this ecosystem, and building this infrastructure to tie it all together. So when you come here as a financial institution, it's a lab for you to get going and for you to prove this initial demand for the product, and let us help you synchronize the whole thing. Securitize, a bunch of these folks have tried to go to other chains and done this exact thing, and they've taken 6, 9, 12, 18 months and not been able to get anywhere. Because this is not the focus. When they come to us, we can do it much faster because we're focused on this thing, and the entire ecosystem's aligned to do this. And so, to me, that's where it goes. That cycle will take a long, long, long time, right? Because we've not even gotten to T-bills yet, right? Let alone corporate bonds, let alone sovereign debt, let alone private credit, let alone all the fucking trillion things out there, right? Derivatives, real estate, gold, commodities, every single thing, every single one is going to take a whole cycle on its own. So I think that's going to continue to be a thing. Each time we go, we'll continue to build Plume, and hopefully we then make it successful enough that we can then distribute it everywhere else as well, right? Just like the stables everywhere today. There's no stablecoin chain. I guess there are some now that are coming up, but the stablecoins is everywhere. That's how it should be. So that's like our take on Plume, which is like focus on end users, focus on crypto native, because I think that's where the initial adoption is, right? And make it, I think the distinction really is make sure it's useful for us, right? Because I do think that replicating TradFi shit is just stupid, Like, it doesn't work for all kinds of reasons. We want to do this with crypto ideals. It's permissionless, it's decentralized, right? It's owned by the people, right? It's sort of like a censorship resistant, all of that. And if you're going to do that, you have to start it with this use case and this experience and this thing. And so to get the institutions to come to that mindset is a whole thing to do. And so that's like I think the thing that we care most about, getting them to the table and then having them work their products in to fit this use case. And once it's there, I think they'll see incredible adoption and growth, and then it will be a foregone conclusion. Like, people will know. okay, cool. If we're going to sell to this market, which is a new set of people, if you were to go to a new country today, you don't market it the same way, right? And if you were to sell to a new set of people on chain, you don't just market the same way. So it's like very simple, basic stuff. It just takes time, And so I think if we just do this right, it's multiple cycles, and it should be a net positive for all of crypto, right? New users for every chain, for every ecosystem, right? And new use cases for everything.
Yeah. Slowly and then all at once.
Yeah, definitely. I think it's the days are long, the years are short. It's going to be a thing. Just like today, we look back at DeFi, right? It feels like a long time. It's been like 3 years. It has like nothing. So like it's these things will happen very quickly when they take off.
Appreciate your time, Chris. Have a great rest of your week here in Denver.
Yeah. Thanks for having me, guys.
Thanks.
Cheers.